Hey everybody, Preston Brent here for our Trader User Group free weekly roundup. This is for the trading week ending December 18th, 2015, and what an interesting week this has been. What I've got on the screen here is the E-mini S&P 500 futures, and I just wanted to show you a couple of things. When we made a low, actually it was a double low, we kind of touched the bottom a couple of times, once on August 24th and then back on September 29th. I use these lows here to create a Fibonacci retracement. You can see here, if I were to extend this over, that's kind of what I used here and here. Yeah, we did go down here intraday before the markets actually opened, but I usually I picked this point right here because this was more of a realistic point here. We had kind of a flash crash on that day, but nonetheless, I've put a retracement on here, and you can see that we are sitting almost right at a 50% retracement at roughly 1985. That would be from the pivot high to the pivot low. Now, this right here is the month of October. I mean, we just did nothing but scream higher, roughly to the tune of about 8.8%. It was one of the strongest Octobers the S&P has had. And then you can see that since then we've done nothing but basically moved down. We've made a high here at the beginning of November or the end of October, and then a little bit of a lower high here and then a lower high here. We've made a lower low and another lower low here that is testing this support zone at this 50% fib level. You can see we're both through the 50 and the 200 EMA, the 50 being the red line, the yellow line being the 200 EMA. Now, the big question is, where are we going to go from here as we go through the end of the year? I know the pundits, as we went through this week, Monday and Tuesday, and then we got the Fed meeting announcement where the interest rates would hike 25 basis points. We moved pretty strong into that. All right, so we got Friday, Thursday, Wednesday, Tuesday, Monday. So this was Monday right here. And you can see we're almost right back where the week started, just about right where the week started. We made the high right after the Feds came out with their interest rate announcement, and then we've been selling off since Thursday and Friday. And we've pretty much given up almost, the week's gains. And now we're sitting at this support point right here. It is a key support point. If we break it, then obviously the next line down is roughly around 1956. Now, if I were to take these drawings off my chart, and let's just step out just a little bit here. I'm going to show you using a little bit more of a highlighter. You're going to be able to see here that this area right here is going to be very important for us. So looking at this area, it held us up here. We were trying to penetrate here. We had a stray move up, but then we quickly sold off. We never did, only one time did we close above this 1985 area from that big August low down here. And then we came down and we did a kind of a double bottom. We had great bullish divergence, so that told us we were in for a really good October. You can see here that we had pretty strong support at this area. So net, this is a very, very strong support zone for us. If this zone breaks, we're going to come down to this 1956 fairly quickly. It's not as strong as this one right here, and should that break, we're going to work our way down in a zigzag pattern and find ourselves somewhere down around this area here, sub 1900. Now, the question that was on everybody's mind is, where are we going to finish this year? Are we actually going to finish in the green, or are we going to finish in the red for the year for the S&P 500? So I'm going to put a couple of additional things on my screen here, and I'm going to blow it up just a little bit so that you can see it a little bit better. Um, what you see here, again, staying on the daily chart, I've got a lot of lines on here, a lot of support and resistance lines. You can see down below there is a wide support zone made up of a number of key price levels where price has stopped and rebounded. There is also a Fibonacci level here, and there's another one just slightly below that. So we've got a lot of support in this area here to come back down and challenge the lows made in August. I believe at this time what we're probably going to do is have a little bit of, next week is going to be 3.5 trading days here in the U.S. markets, Monday, Tuesday, Wednesday, half a day Thursday, and then the markets are closed in the afternoon and then all day on Friday. So I believe it's going to be we know it's going to be very low volume. Prices are going to tend to be choppy, but now that we got through this triple witching week where we had quarterly options expiring, we had monthly options expiring, we had index futures options expiring, we also had stock futures expiring. So everything was expiring. So I do believe we're going to have a little bit of a move up in this kind of fashion. But now this blue line right here is the opening price of the year for the S&P. All right. And we closed for the weekend at 1994.75. Now the question is, are we going to be able to regain 2055 between now and the end of the year? And there's only about 7.5 trading days left. So if you take the 2055 and then you look at where we closed, which was in the E-mini futures, 1994 roughly, it's not that bad. I mean, we need 61 points essentially to get back up here. I do believe we're going to start off Monday, maybe Sunday night when the markets open, a little momentum down, but I think we're going to move back up. We're going to see some volatility come back in, okay? But, how much higher are we going to go from here? I think it's going to be limited at this time. I think the markets just want to go down. The other thing that's really interesting is, let me take this off the screen for a second. The other thing that's very interesting in my mind is that we're almost right back where we started before the Feds raised their rates, okay? If you look at Monday, we can look at the charts here. Of course, this was Friday right here, and you got Thursday, Wednesday, Tuesday. And as I said, this is the Monday candle here. And you can see Monday, Tuesday, and then the all-important Wednesday, we actually closed up higher. But then we had a bearish engulfing pattern on Thursday. That was the first sign of potential trouble. And I had told our members, I said, we can expect some more downside action. And now that's exactly what we got. Let me just exaggerate these candlesticks so you can see what I'm talking about here. If I just widen them out and thicken them up a little bit for you, you can see right here that the high of this candlestick was right up here. The low of that candlestick was right there. And what I'm talking about is a bearish engulfing. So that was the pattern right there on Thursday, the day after the Fed announced their interest rate hike. So we actually made a higher high, but we made a lower low, and we closed on the low. That is a classic bearish engulfing pattern, a classic bearish expectation for the next candle, which was here. And sure enough, we opened right at this area here. We tried to move up, but the sellers just took us, and we closed right at the bottom. Okay, so we've got a scenario setting up that we can come down and challenge our August lows before the end of the year. Traditionally, I have said, and if you go back 70 years, December is, we finish higher in the month of December than where we started. And over the past 15 years, I think it's like 14 out of 15 times December's finished on a positive note from where it started. So, but history is one thing. Reality is another. All we're left to is really trading what the charts tell us. And what they're telling us right now is we can expect more downside. If I take it down and let's do a little bit of an inside view of the daily chart, and we do it with a 2-hour chart. And looking at this 2-hour chart here, you can see the Elliott wave count, for those of you that follow that, is a 3-leg down. That suggests more downside action can be expected. But typically with the 3-leg, you have a counter trend move giving you a 4-leg, an Elliott wave 4. And then you have sellers come in when it gets into a tight zone here where we just can't seem to take out, right? You can see this area right here, which is very tough, right around 2032. And I would expect that if we get up to this area, I'm going to be interested in shorting this market. Now, and I'll set tight stops up above it. And if we keep going, then bully for the market. We'll just keep riding it up to the next resistance area up here at 2051. But I'm going to look at a possible bounce up to the 2032 area and then a rollover, which would give us an Elliott wave 5 somewhere south of 1985. Okay, that's what I'm looking at. Now, this is a 2-hour chart. So each day is marked by these dashed lines, just to put a time frame on it. So we're looking at basically taking us out to the end of the year, out in this area here. So again, is this going to happen, or are we going to move up like this and get stuck and then start moving up and making higher highs and end up in this area for the end of the year? Because I've heard analysts say we're still going to hit 2100 before the end of the year. Now, that was before today. I don't think they're going to say the same thing, but what I'm looking for is this pattern to play out here. This 3, 4, 5 Elliott wave pattern taking us lower. And how do I know if my bias is wrong and we end up going higher? Well, we're going to get that inevitable move up. And we've got, as you can see, I'm going to draw it in here again, a very strong resistance point now around the 2032 area. If we move up and start to roll over, I'm playing that short anyway, okay? And if it keeps going down, but let's say it finds consolidation here, north of this price, and starts to move higher, and then this higher move takes out that prior pivot high there on this counter trend move, then I'll have more confidence as we finish off the year. If it doesn't do that, I'm expecting the price down in this area here, giving us an Elliott wave 5. And as you guys know, an Elliott wave 5 will give us that bullish divergence, because if we do get this counter trend move up here, the MACD is going to move up like this. It's going to come down and make a lower low. The MACD will come down and probably stop somewhere here and start back up like that. It would give us the bullish divergence to give us the impetus to move higher. So I know that's a hell of a lot of speculation, but that is based on the current pattern that we're in right now. And again, we trade price action, and we trade at one bar at a time. So each bar is just another data point to confirm, are we still a go for this price action, or is it going to change? That's where we're sitting right now with the markets. Now, because we're coming into a holiday week, holiday shortened week, as I said, volume is going to be lower. We're going to tend to see the price action be a little bit jumpy, a little bit, choppy, especially the way we ended today on the lows with volatility popping towards the highs. I will say that the tendency is for volatility to come in after an option expiry. Now, the other thing that I've been telling my members in our group is that watch oil. Oil is going to be a key. Now, I've said earlier that oil is going to be a key going into 2016. And if we look at the price of oil, it seems like, the first thing I look at when I get up in the morning and I turn on and look at the charts, I want to know what oil's doing. If it's in the red, especially if it's more than 40 or 50 cents per barrel in the red, then you pretty well bet the equity markets are going to be in the red. Now, if I go out to a daily chart, I have forecasted oil. I'm still staying by my forecast. You can see it's moving down. It's coming down to this level that I had forecasted around $30, $31 a barrel. Okay, we're moving right down, and from a timing perspective, um, I, my system had forecast to hit sometimes the end of December to sometime in the middle of January, this time frame here. I could have drawn it using Gann and Fibonacci, but I chose just to use my system. It's one click and it can put it on the chart for me. But this is designed by Gann and Fibonacci. Fibonacci determining where is the support point as you move down, and Gann is the time frame of when you can expect to hit that support point. So this is a really cool tool, and it really provides a pretty good prognosis. Now you can see this last one here, it had a projected time frame here, and we actually hit it about a week early. Okay, now this one we're looking like we're going right on schedule. Once we get down to this area here, I'm calling oil to now start to do a choppy consolidation in an ABC pattern like that, which is what we typically get in an Elliott Wave 5. And this can carry us out into the mid-January, early February timeframe. Maybe even into March, springtime, before we start to clear and start moving higher. Okay, our members know that we've got some really interesting trades setting up for 2016 in the currency market, in the energy market, in the precious metals market. We got some key equities we're watching, as well as the indexes and volatility. So we got a lot of things going on, guys. This coming week, this Sunday night for our members, we have a Sunday night weekly market watch session. And then Trader User Group will be off for the holidays on Tuesday and Thursday. And then this next weekend, we will not have a weekly roundup. We will have a Sunday night session for our members, but this will be the last weekly roundup until we get into 2016. So I want to wish everybody happy holidays, happy New Year's, be safe, enjoy your family and friends, and we will pick it up in 2016. If you want to join, I've got an offer attached to this email. I'd hope to see you in. We had a really interesting, fun year in 2015, and I think 2016 is going to promise to be even better, if you can believe it. We've got some great trades that are setting up for us very nicely. So I will see our members this Sunday night. For non-members, come on in, check out the offer, and come on aboard for 2016. It's going to be a lot of fun for the year. All right, everybody, have a great weekend. See you later. Bye now.